China-Japan diplomatic row explodes. A window of opportunity for India. Big catch for the Indian seafood industry as Beijing bans Japanese imports. Relief after pressure from steep US tariffs. Can India capitalize on this momentum?
Hello and welcome. You're watching another episode of NewsX Explained with me, Vineet Malhotra. Today we look at a fascinating shift in global trade dynamics, one where geopolitical tensions and tariff pressures are reshaping seafood supply chains and Indian exporters may emerge as key beneficiaries. At the heart of this story is an escalating diplomatic crisis between China and Japan. The immediate trigger for the crisis was Japanese Prime Minister Sanae Takaichi's remarks linking a potential Chinese action against Taiwan to a survival-threatening situation for Japan. The most recent spat between two of Asia's biggest countries is an uneasy history marred by rivalry and strategic mistrust, intensified following the Japanese Prime Minister's comments pertaining to Taiwan. On the 7th of November, speaking to a parliamentary committee, Takaichi said that a Chinese naval blockade or other action against Taiwan could be grounds for a Japanese military response. Referring to possible Chinese action in Taiwan, she asserted, and I quote, "If it involves the use of warships and military actions, it could by all means become a survival-threatening situation." While previous Japanese prime ministers have expressed concern about China's threat to Taiwan and said that Taiwan's stability is vital to Japan's own security, they have not publicly specified how Tokyo would respond in the event of a Taiwan contingency, instead choosing to embrace strategic ambiguity. The Japanese Prime Minister's comments sparked not just diplomatic but an economic response from China. Asia's largest economy flexed its economic muscle, reinstating a full ban on Japanese seafood imports. China's foreign ministry went as far as to say that there is no market for Japanese seafood in the current climate. China, which seems to be seeking to make an example out of Takaichi and Japan, implemented a string of punitive measures on Japan aimed at hurting Tokyo's trade and travel. Foremost among these is China suspending imports of Japanese seafood just months after it partly lifted a previous ban issued in 2023. China has historically been Japan's largest seafood market, a spot that has overtaken by the United States after China's previous ban on Japanese seafood imports in 2023 in response to Japan's decision to release wastewater from the damaged and decommissioned Fukushima nuclear plant. Before the 2023 ban, however, China and Hong Kong accounted for more than one-fifth of Japan's seafood exports. With China taking up around 20% of Japan's exports, especially high-end products like sea cucumbers and scallops, the ban is a serious hit to Japan's fishing industry. While the confrontation between China and Japan sees no signs of slowing down, the clash has opened up a window of opportunity for India. In an amusing silver lining, shares of Indian seafood companies jumped sharply following Chinese action on Japan. Hit by steep tariffs by the Trump administration, India's seafood industry has gained with China's curbs on Japanese imports. Indian exporters witnessed a major boost as China effectively, shut its door to Japanese seafood. Shares of Indian seafood exporters jumped as much as 11% soon after China's order came into effect. Shares of Telangana-based Avanti Feeds, an integrated seafood company, closed nearly 10% higher, its strongest daily gain in over 2 months. Meanwhile, those of Coastal Corporation, one of leading producers and exporters of seafood in India, rose 5%. Coastal Corporation had in fact announced plans earlier this year to ramp up shipments to China and other markets as part of efforts to reduce exposure to the United States after it erected trade barriers. Overall, Indian seafood stocks climbed by as much as 11% on the 19th of November, shortly after media reports said that China had informed Japan of its intention to halt seafood imports. This comes as the development points to a redirection of Chinese demand to suppliers like India. The shift will also be a major boost for Indian seafood exporters who have been under pressure due to steep US tariffs. The China-Japan feud may thus prove to be a major relief for India. Coming on the heels of the United States, President Donald Trump's steep India tariffs, China's action may provide a breather for India's seafood exporters, who so far were heavily dependent on the US market. The United States remains India's largest seafood market, supplying major retail chains including Walmart and Kroger. Seafood makes up an integral part of India's export market, with total seafood exports reaching $7.4 billion last year, with shrimp contributing 40% of the value. With higher tariffs affecting outbound shipments, exporters have been exploring new markets. Market analysts have long stated that any fresh demand prospects would be encouraging for the industry. With the latest geopolitical developments, there are several factors that may make India a logical alternative for China's seafood demand. Firstly, of course, is India's own need of diversification away from the US. India's seafood exporters have been actively looking to reduce their dependence on the US market because of steep tariffs, some reportedly up to 50%, that have squeezed profit margins. Secondly, even before this China-Japan skirmish, Indian producers were shifting focus to Southeast Asia and China to spread risk, with Asian markets providing a prime location. The Indian government has also proved a major backer, approving a substantial support package of nearly rupees 450 billion rupees for its labor-intensive export sectors, including seafood. Most significant amongst those factors possibly is the growing strength of India's seafood market. As we know, in the last fiscal year, India's total seafood exports stood at $7.4 billion. Indian seafood exports also recently hit a historic high in volume, with India shipping 1.78 million metric tons of seafood in the year 23-24, valued at over 60,000 crore rupees. To sum up, India has the volume, the capability and infrastructure to scale up further, especially with a major competitor, namely Japan, suddenly shut out. Apart from a significant boost for the domestic industry, the moment has also broader implications for India and many of its export-driven industries. Firstly, of course, is the way that industries like seafood can serve as geostrategic tools, giving India more weight in regional as well as global trade games. Secondly, there is reduced concentration risk for the country by diversifying away from tariff-heavy or politically volatile risky markets. Letting India stabilize export revenues, with seafood industries pushing into newer and bigger markets, the moment will also provide significant policy reinforcement, showing that the government is serious about blocking labor-intensive exporters with its 450 billion rupees export support and the package. Finally, this provides avenues for long-term partnerships, allowing India to build deeper ties with China or even other Southeast Asian nations to build lasting and stable trade relationships. And so what started as a trade spat has kicked off a series of small and large recalibrations across the region. The event may signal broader shifts in Asia's trade architecture as China uses trade bans as diplomacy. Non-traditional players like India can benefit but must also exercise caution about becoming dependent on politically motivated demands. On the other hand, India's rise as a seafood exporter could be a microcosm of how it positions itself in Asia's emerging economic order, providing opportunity for it to display its flexibility and adaptability to a changing order. To sum up, China's suspension of Japanese seafood imports has proved to be a strategic opening for Indian seafood exporters, who are well placed to fill the gap. Backed by volume, the government support and a growing push into Asian markets, stocks of exporting companies have also surged, signaling optimism in the industry. But geopolitical-driven demand is also volatile. For India to sustain this advantage, producers will need to ensure supply chain resilience, meet quality standards, and guard against over-reliance on this charged market. If managed well, this isn't just a short-term windfall, it could be a turning point in how India export-led sectors leverage global power plays to their advantage.
The China-Japan diplomatic row explodes. A window of opportunity for India. Big catch for the Indian seafood industry as Beijing bans Japanese imports. Relief after pressure from steep US tariffs. Can India capitalize on this momentum?